Hey everybody, Boris of BK Force. Welcome to the weekly technicals for the crosses for October 23rd to October 27th, 2017. And actually, there's tremendously interesting ideas on the crosses this week. After these two miserable weeks of low volatility, some very, very interesting ideas have developed, but less intuitive than you may think. There are trades that look good that I think are actually going to be very bad. So I'll show you a couple of my thoughts on various setups that I think are actually fadeable rather than tradable. One way or the other. First and foremost, pound CAD, which, as you'll see in the charts, looks quite good, but actually I think is entering into a massive zone of big resistance in the 168. So it's kind of like I like it for the next 100 points, but I like it 200 points above as a sell on the move. Of course, a lot of this is very contingent on what happens Wednesday with the BOC. If we get a very dovish BOC, none of this matters. We're going to smash through this resistance level, and that's probably going to create a much more durable, sustainable rally to the upside. If, on the other hand, as I suspect, the BOC is going to want to try and cut it both ways and remain as hawkish as they possibly can, we could have a big move off these levels, which is why I think they're kind of fadeable. Aussie Kiwi, on the other hand, to me, which looks so like such a strong breakout, actually we're going to see that on a zoom out basis is entering into a massive resist point at this 1350 level and looks very fadeable just on a relative value basis. And then there's a stealth story here that we haven't looked at for a while that looks like really a very nice stealth runaway trend trade. And this, of course, is going to be very contingent on just how hawkish the ECB is. If Draghi comes in and sounds relatively hawkish, just it's basically suggesting that yes, the taper is coming and it's time to really unwind the QE protocol. That alone could push us to fresh yearly highs in Euro Swiss. And I'll show you the charts and you'll see how interesting they look. But first, let's start with pound CAD. So here's pound CAD, big breakout candle, no doubt. Looks like we could have some continuation here. But at the same time, as we're looking at this, look at these rounded resistance edges right around the 67, 68 zone in which we're coming in. And notice that all of them are very, very fadeable. In other words, we failed multiple times at these levels. So to me, this is really a big critical test here of just how strong this impulse move is. We'll see, obviously, next week with BOC, but really to overcome this massive impulse move, you need a very dovish Bank of Canada that could push this rate all the way to 168. And if we pass through the 168 zone, yes, at that point it looks much more likely that we're going to challenge the much larger 170. It becomes a trade. On the other hand, if you're willing to stand in front of a locomotive and take a punt here in this 67, 68 zone, it's really 67 zone is a start of the fadeable channel. It's an interesting technical fade against really almost a triple top here, and a possible lower high failure here. So to me, it's a non-intuitive trade, but one that really presents some very interesting opportunities, especially on a risk-reward basis. Now, odd Kiwi is really interesting because if you look at it, it just looks unambiguously long. I mean, look at this massive breakout. We took out the 111. It looks like it's ready to run, but just bear with me a second here. I always have to figure out how to do this. Sorry, I just want to move off this line. And let me just come out over here. Now watch what happens as we zoom out. If you zoom out, you're basically looking at a massive resist cluster at this 112, 113 level. Sort of the highs over here are 112.50, the highs over here around 113. So this whole 50 points, 75 points above this level is a massive, massive cluster. And it's not even a cluster here, it's a cluster there as well. That whole area is a huge, huge value proposition zone if you think that there really isn't that much of an economic difference between New Zealand growth now and New Zealand growth going forward. This is, as I said, really a bet on the fear factor. And as the fear factor dissipates a little bit next week, this presents a very interesting technical short into this move, or at least a reversion to the mean move. Now, the support here comes in all the way down to like 111.50, but even a 60, 70 point correction, very feasible against these very, very tight levels. So you have maybe 100 points worth of risk and certainly potentially 100 points worth of profit if you flip the trade the other way. So although this trade looks super strong in the short term, it actually is coming into massive resistance. and could present a very interesting fade move as you start the week. The last thing that I wanted to show you was Euro Swiss, and I don't have it here, so let me just call it up for you. That is very interesting because let's take a look at this chart. Now, look at this. It's really a stealth rally. It looks quite good on a technical basis. Nice big channel here. Now, of course, we had the big impulse breakout, correction, and then we continue with this channel. And that to me is perhaps the most interesting part because the top of this channel is not far away. It's basically sort of 1650 zone. So ECB comes in and it's hawkish. We're going to take out the 1650 zone, and after that, it really is free territory. Now, what's really interesting is it's free territory. I mean, I'm getting way ahead of myself, but it's free territory all the way towards the very infamous 120 ceiling, or 120, what is now a ceiling, what used to be a floor. The 120 SMB floor, which blew up in 2015 and took everybody out. So this is a super, super interesting development here in terms of the move higher. If we get positive movement out of ECB and we take out this particular level of around 1650, it opens up scope for much longer and more durable trade to the upside. The bottom here is around 1500. That's the support area, and any kind of a minor correction, that's where it holds. If it breaks that, then it really turns much more negative, and the market really could test all the way down to 1400 on a more distributed basis. But here is a very, very quiet, unassuming pair that certainly looks to be trending in an up channel, and definitely worth a look as the week progresses. Wish you guys the best of luck, the best of trading. Boris Schlossberg, over and out.